Well, welcome everyone back from the tea break. I hope you had good conversations. I think we will have a very interesting conversation here on the stage later as well. So I think before we start, I wanted to do a very quick primer for us here, right, to just get warmed up and familiar. I think there'll be some terminology, some terms, that will come up later that, some of us probably have heard these terms. Some are more familiar than others, but I thought, we'll just do a very quick introduction, and then I will invite the very esteemed group of panelists to come up. All right, but before I start, I can't see you very well in the light, but just a very quick sense, how many of you have dealt with blockchain technology or invested in cryptocurrency? Well, I said one hand went up very quickly, 2, 3, 4, 5, 6. Well, okay, quite representative across the room. So I was going to say that we are going to try to keep the panel time a bit shorter, and hopefully there'll be more questions from the audience, but do join us with the questions. All right, so very quickly, I'm going to try to bring us through this topic of blockchain and some primers for us. Okay, so very quickly, quick introduction to what is fintech. We will look at blockchain very quickly. We talk about cryptocurrencies and digital tokens. We'll touch on ICOs, STOs, cryptocurrency trading, and then we will go straight into this issue of blockchain. So quick introduction of fintech. What is fintech, right? Fintech has now really become a very big topic. MAS has focused a lot of attention on it. But today it's not really about fintech for us. Today we'll be focusing a lot more on what we will do as one particular aspect, which is called blockchain. But basically, if you look at the fintech world, it's hit over 111.8 billion in investment in global fintech. And what are some examples of this? So blockchain has come up quite a lot right now, and we'll be focusing on blockchain and banking and payment systems today. But beyond that, there's crowdfunding, digital asset trading, peer-to-peer lending has come up from that, robotic advisors, artificial intelligence we heard earlier today, it's going to be a big aspect of the technology change as well for us. So what is blockchain in a nutshell? It's essentially a form of recording and verifying transactions. So what happens is someone will request a transaction. The requested transaction will go through what is called a P2P network. So these are what we call nodes, right? So they're little computer systems all joined in a network. And what this network does is to try to verify, right, what we call proof of work concept, and once it's verified, that transaction will be locked in onto a new block. So it's called blockchain because it's actually it's a building block, right? Each time there's a new information that is verified, it gets added to the chain. So the whole idea is that it forms a long chain, and that chain can't be changed after it's been added. So that's security, and and the transaction is then completed, right? So this is in a nutshell what the technology is about. Okay, so why blockchain? I think there's been a lot of hype or hope or hopes, right, depending on how you see it. But essentially, the technology behind it promises to be of application, right, both out of just cryptocurrencies, which is what has been commonly used right now, to other applications. We'll hear from the panel later on some of the views on that. So what is cryptocurrency? Essentially, it's a digital currency. It's usually decentralized. It uses this concept of what we call cryptography, which is essentially a form of security, so that you can't have unauthorized changes to the system itself. Right? So it creates open decentralized networks. It gives a way to also incentivize participants. So some of you may be familiar with mining, right? And that's the idea of basically people working on the system to generate the ability to earn some of these currencies themselves. Okay, and what are digital tokens? Essentially, it's a subset of cryptocurrencies. It's built on existing blockchain. The terms that have come up very recently has been utility token versus security tokens. So either a form of token where really the only right for you is to exchange it for other goods and services, or security token where it's a form of investment, right? It could be equity, it could be debt. It can give you certain rights of investment in it. And with that, we've heard of this term now called ICOs and STOs, right? So ICOs are essentially initial coin offerings, or what we call DTOs, digital token offerings. So what this is essentially a form of fundraising. We will talk about it a little later as well, But if looking at some data that's been generated, it was about 1,257 ICOs that were basically launched in 2018 in excess of 7.85 billion. That number might be higher, right? I think if you look at different forms of statistics. Another form of ICOs is what we call STOs now, what security token offerings, right? So these are more regulated. Essentially, these would form investment structures, and many countries have now are regulating, right, what some of these investment structures can do. And there's now cryptocurrency trading that has evolved. Over time, we have new exchanges, so not the Singapore exchange, right? But we have Bitcoin exchanges, we have the digital asset exchanges, which will facilitate people to trade and hopefully to generate trading activity through that. So Binance, Huobi, KuCoin are some examples of these trading platforms that have now come up. Okay, and now very quickly, some of the big terms you need to just be familiar with today will be what we call distributed ledgers, or DLT. Right? This is distributed ledger technology, and it's the heart of the big Bitcoin, or rather of the blockchain technology. But the idea is really to sort of build onto a ledger and to continuing building on it so that people can have that as a proof and evidence of the transactions. DApps or dApps are essentially decentralized applications, and these are found on the Ethereum network. Essentially a form of decentralized applications that you can put onto the network itself. All right, smart contracts, as we heard, again, is a form of, it's a code essentially, right? That basically triggers based on certain circumstances that you build into it. So if the conditions that it's supposed to pick up comes about, it will release funds. So for escrow, for example, it's a very commonly used way of releasing funds. Okay, private and public blockchains, again, blockchains are meant to be essentially public at the outset, but now there are private blockchain systems as well, where people can just access it only within a closed group. All right, wallets, again, is a big thing for this whole area of cryptocurrencies. Essentially, it's a sort of software which allows you to store your digital assets. All right, and finally, the white paper is the term that you will have when you are looking to evaluate, right, what sort of assets you are looking to invest in. So in a nutshell, I mean, like I said, this is a very layman introduction to get us all warmed up, with some of these terms. And I now have the pleasure of inviting my panelists upstage. Can I first invite, maybe I'll invite all of them up and then I'll introduce them. Today I have the pleasure of having the panel for to talk about blockchain and banking, and I think some of these buzzwords that we've been hearing quite a lot about. But maybe I'll let them introduce themselves first. Maybe starting with Sonia. Maybe a quick word about what you do and what experience you have with blockchain and in this area of the field.
Hi, I'm Sonal. I've been in the SME lending space, currently the Chief Data Officer for Validus Capital, which is a peer-to-peer lending platform in the SME lending space in Singapore, looking to expand its footprint across the region. Prior to this, I've spent most of my career at American Express in the Risk and Information Management division in the analytics field, looking at consumer risk management and underwriting. Current interest in blockchain is how it can be leveraged, obviously, in the space of peer-to-peer lending platforms, and how we can establish a more financial inclusive SME lending space, leveraging this technology.
Good afternoon, I'm Derek. I'm CEO in Hong Kong from Bank of Singapore. I also cover the whole Greater China and North Asia region. So, blockchain, when it came out in 2008, it is supposed to replace banking institution. So I think, luckily so far, it has not. That's why I still have a job. But of course, for banking, we are looking at it closely. From cryptocurrency has evolved into this term now, blockchain. And the technology behind blockchain actually is very interesting. There's a lot of things that we can do with it. I think, in fact, actually yesterday there was a trial in terms of cross-border payment between MAS and Bank of Canada, which was successful. So in terms of application within the banking world, is it applicable blockchain? Definitely yes. I think in terms of payments, in terms of the way investments are being placed, OTC trades, in terms of KYC, AML, the way banks today we communicate with each other. I think definitely there is a place for blockchain, and banks are evaluating that, in terms of to make it more transparent, consistent, and make it faster in terms of execution for the clients as well.
Yeah, good morning. Heinrich Zettelmeier, I'm the founder of Blockchain Valley Ventures. We are a spin-off from Lücke Corporation, which will be one of the first regulated crypto or token exchanges. We are, on one hand, a venture capital firm, fully focused on investing in companies that will benefit from blockchain technology. And at the same time, we have an advisory arm with the specialty of security token offerings, where we, like an investment bank, go end-to-end in security token offerings, based very much on our Swiss pedigree and Swiss history, where it was already possible to do this type of offerings.
Hi, my name is Jinesh Patel. I run an early stage venture fund here in Singapore for a group called Diamond Asia Capital. We're an early stage fintech focused fund, typically in the Series A, Series B stage of investing. We've invested in 15 companies. In our first fund, we're in the process of investing to our second. Within fintech, we don't really take a core view on AI or blockchain or quantum. We think technology enables solutions, and for which we are business model investors. So we prioritize our investments on a business model basis, not necessarily on the technology. But obviously blockchain is one of those technologies that we very actively follow. Thank you.
Hi, my name is Sagar. I work for a company called Ripple. I lead Ripple's relations with central banks, governments, and policymakers across Asia Pacific and the Middle East. Ripple is a Silicon Valley headquartered payments software company, one of the very few companies which leverages blockchain and digital assets for real production use cases. We have around 200 clients using our softwares and products today. The vision and mission of Ripple is very simple. We want to create a new internet that we call the Internet of Value. An internet where value can be moved like we move information today, seamlessly across borders in a matter of seconds. And the way we are doing that, achieving that mission, is by creating real products based on blockchain and digital assets, working in the regulatory circles, working with policymakers and regulators. And basically, instead of having an anarchist view of things that cryptocurrency will replace fiat currency, we are only using a digital asset to connect fiat currencies to make cross-border payments seamless.
Well, thank you everyone for your introductions. So you can see we have a very wide range of experience here. From I think from a company which is sort of starting out in this space, looking to see what's good to to change the way the operations can be in a company, to I guess more traditional banking experience, to investments in this blockchain area, to sort of a technology agnostic investment approach, but interested in this space, to someone who's fully in this space. Right? So let's kick off the discussion today, and then maybe with Derek first, right? I think in your in your introduction you mentioned that you're glad you still have a job, right? After all these 10 years. This year is a significant year. I think you mentioned 2008, 2009. It's really when Bitcoin first came up, and the whole idea of cryptocurrency and blockchain started making its name right around the world. And at that point in time, many people are still sort of skeptical, about it. And so banks have been saying, what's this about? So maybe starting from you, Derek, what's your own view in terms of how blockchain has affected or impacted the traditional industries like banking, for example?
I think for banking, maybe I'll just start from a kind of personal view as first. I think when it first came out, in 2008, a lot of people always ask me, Derek, what do you think of Bitcoin? Should we invest? So I always, my comment is always, don't ask me. It's very difficult for a banker to comment, especially a person at my level, because I I get bombarded with regulators almost every day on AML, KYCs, all this, right? And it's very difficult for me to comprehend a currency. There's ideally, there's no restriction across markets, across countries, which is very good, I think, because, but if you look at now, as I understand more about blockchain, right, and the technology behind this crypto, which is blockchain, which is the topic today, if you look at it, it's actually interesting because it actually can create a lot more transparency, a lot more consistency. So in terms of things that for banking we are looking at, right, how do we make it, how do you remove some of this process which I call, or some of the things that is happening in the market, the middleman, So as the middleman goes away, right, so what you achieve actually is more efficiency in the market. What you achieve is actually more transparency. What you achieve actually is more value for the clients. Of course, a lot of things that is basically what is being practiced in the banking now. My personal feel is I think some of the processes, a lot of the things will change. But I think the change is for the good. If you look at crypto by itself, if you look at blockchain by itself, right? I think Ben has mentioned, it's a ledger, right? So basically, if you look at it, you are able to trace back all the way to the source, and from a banking perspective, actually, I think it's very good. A lot of things that we can use it, for middle office, for back office in terms of the risk. But of course, I think what has transpired, right, in terms of when it first started out as Bitcoin, Bitcoin was viewed as an investment by itself. So a lot of people got into it, investment by itself. I think if you go beyond that, right, can actually Bitcoin be used as a tool for investment? Can Bitcoin be used to purchase bonds? Can Bitcoin be used to purchase equities? Can Bitcoin be used to today we have ICOs and STOs, all this, right, to invest in companies. But can Bitcoin be used in the exchanges? I think that is something which is more interesting to me from a banker perspective, actually.
So, as a banker, is always looking for investment opportunities. But before we move on to that, maybe to hear from, say, Jinesh, right, on your views of how, from 10 years to now, how, from the investment sector, how have you seen this whole Bitcoin, and blockchain technology affecting this industry?
Yeah, so our views are quite simple on this, because I'm a very simple guy. We separate the whole kind of ecosystem into two parts. Blockchain as a DLT, as a ledger, which services enterprise or solution-based needs, and the currencies, which are the applications. So for me, applications are one aspect that are important, but goes back to my thesis around business model. If you're building something on a blockchain protocol that services a specific need that has a tangible value that is ascribed to the stakeholders within that ecosystem, then it's something we're interested in. For us, cryptocurrencies are just an application of the technology. And whether they are deemed an asset class or not is irrelevant to me. I would rather be in the exchange infrastructure space, typical to the gold rush of being the picks and shovels guys and making money from everyone who wants to trade them as an asset class, as opposed to be an investor in any specific currency or coin. So if you distinguish the two, then there's a lot of opportunity. And the way we think about it as investors is we would prefer more to look at the infrastructure elements of what blockchain can do, whether it's in the enterprise, whether it's in payments, whether it's in other areas of finance, as opposed to really the more commercially stroke publicly well-known aspects of it, which tend to be in the whole currency trading space. Distinguishing the two is very, very important.
Thanks for sharing the view. So I think the view is really looking at. I think people always associate blockchain and Bitcoin as being synonymous, and entirely the same thing, right? But I think Genesis' views. They're quite different. Maybe we can hear from Sagar, right? I mean, Ripple is causing waves, right? In this sector. And what's your own view? I mean, on investment opportunities and how you sort of marry some of this technology, and what Ripple is doing right now, in the very traditional space of money lending and things like that.
Sure. So before the panel, we were just discussing that this year is the 10th year anniversary of Bitcoin. And I think over the past 10 years, there has been a lot of noise, debates, discussions on how blockchain will change the world, how blockchain is the panacea for all the problems the world is facing today. Clearly, that is not true. I think in the middle of all those debates and discussions, some real use cases have come across and come along. And I think there has been a consensus globally that if there is one area where blockchain digital assets can have a real impact, is payments, and more specifically cross-border payments. The fact is that the cross-border payments infrastructure of today was not built for the times we live in. It was built in the early 70s for a very, very different purpose. It's funny that in a world where we live in, where we can stream videos from the space station in a matter of seconds, it will still take me 2 to 3 days if I want to send money from Singapore to London or Singapore to US. And that's the problem our founders at Ripple founded the company for. So they took a problem and then looked for a solution instead of the other way around, where people are treating blockchain as a hammer and searching for a nail. So that was how Ripple started. So we focused on cross-border payments. And then we identified 2 problems with cross-border payments. There was a problem of connectivity, and then there was a problem of liquidity. The connectivity problem is nothing but the messaging problem, so today there is SWIFT. We believe that some of those things could be changed, which is where we came out with a couple of products based on a customized form of DLT, which today we have more than 200 customers, banks using it live in production. When we started off, we were using a pure blockchain, but our customers came to us and said that, look, this is great, but you know what, we don't want the transparency. This is too transparent for us. So if I am bank A, you are bank B, I don't want bank C to have visibility into what I am doing with bank B. So we went back to the drawing board and then customized our solution to make it very, very bank specific, very, very enterprise payment specific. And that's already, we are seeing a lot of traction there. The other problem we are trying to solve is the problem of liquidity or pre-funding. People who are aware of how cross-border payments work today, there's a lot of reliance on pre-funding and liquidity management. We believe that a digital asset can actually solve that problem. And it's no longer theoretical. We actually launched our product called xRapid sometime in October last year to solve exactly that. So basically we're offering that product to banks and smaller PSPs, where they no longer have to pre-fund fiat currency in different accounts across the globe, but they can leverage a digital asset like XRP to source real-time liquidity. So this is how we are leveraging digital assets and blockchain to solve a real-world problem, and we are seeing real customers use these technologies live in production and seeing real traction.
So you mentioned XRP, and in your view, that would be a token, or what would you say? How will you characterize that?
So I would not. So I'm not a regulator. I will refrain from giving it a terminology. For me, it's a digital asset. It's decentralized. It's open source. Anyone can use it for anything. Ripple, the company, uses it for a very specific use case, but you and I can go home and download the validator and use XRP for our own use case. Now, unfortunately, a lot of use cases today is speculative trading, but we hope that as the industry matures, as there is more real use cases of digital assets, and not just XRP, any other cryptocurrency, we will see more and more non-speculative use cases for those digital assets. I would call it a digital asset, and I think more and more regulators, so CPMI, BIS, Financial Stability Board, all these international regulators in the last year G20, Communic agreed that these tokens should be called digital assets and not called cryptocurrency, because these are not really currencies.
So I think we're coming to a point where we're trying to see how we characterize, the use of this blockchain technology. Maybe to hear from Heinrich, right? In terms of views of digital assets versus say ICOs, STOs. I mean, there's a lot of hype right now. And people are concerned about how some of these are traded or being touted as investment opportunities. Maybe from your view, what do you think from an investment angle in blockchain? I think that's something you do quite a lot of. How do you make sense of this whole space?
Yeah, I mean, on one hand, I mean, we invest in companies, in business models that will benefit from the use of blockchain technology in their business model, where their business will be transformed, or that present a necessary element in the coming fintech infrastructure that use blockchain technology. So for example, we invest in companies that do track and trace, document handling, in supply chain management. Yeah? And this is something where you don't have any regulatory complexity. It's straightforward, where a distributed, public, trustable ledger really brings a lot of benefit. Gaming is another item that many people don't understand, but there you have already the tradition of virtual items, now making them tradable beyond the game. Sounds good. Yeah, and sounds relatively easy to do. Fintech is a sector, of course, and as you said, I mean, exchanges, marketplaces are the first ones that will benefit from this, e.g. the investment from myself, for example, in Lücke. But also there will be more and more elements to come. Now, you spoke about ICOs and security token offerings. Of course, in 2017, with coins, I mean, this was a boom, fueled, we don't even know by what, and of course many tokens were issued and people were nearly blindly buying that. That is over. Yeah? I mean, the market, the crypto market is very, very low. ICOs are at a super low level, very small at the moment. And that is maybe good because it washes out a lot of the low quality. Yeah? What we are excited about are security token offerings, because security token offerings, as you said, are digitalized assets. And digitalized asset is for me very interesting at the basic for the retail market, for the small investor that so far has a problem to access investment products through the traditional channels, and now has the chance to do fractionalized ownership of a company, maybe a fine art painting, and many asset classes that were not accessible. And that makes it attractive. And it's also the value of this is clearly to be determined, because I mean you can then make your own calculation, how many tokens, how many shares that represent, what could this company be worth. So we enter in an area that people can understand and value. Of course, security token offerings are securities, so you have to observe all the regulation around it. But sometimes people overestimate these regulations. In the US, of course, it's very complex. It's over-regulated. But in the rest of the world, it is regulated, yes, but it's understandable. So in a security token offering, like in an IPO, in an equity offering, you need to make a prospectus. Now, that is not the most difficult thing in the world, so let's make a prospectus. And so we have done this type of offerings.
And think the prospectuses are very daunting, so.
Yes, of course, and law firms were
we like prospectus.
work a lot with that, but in the very end, it's not really rocket science. It's just a good craftsmanship of doing that and doing that properly. And then you have, of course, the tradability. That is today an issue because you cannot trade, because nobody has the license for that would be able to trade that. And so this is why everybody looks now for some exchanges to get licenses in whatever parts of the world, so that we can start to have a secondary market for that. At the moment we will have that, we will get a market, and this will all start to move a little bit stronger than we see now.
So I think your view is still looking for, I guess, blockchain creating investment opportunities, right? STOs and
yeah, I mean, for the venture investors like us and others, we invest, of course, already now in the companies that will benefit from that. But I think the retail investor will benefit only or mostly in the moment either through the security token offerings or through the regulated exchanges, where then it's accessible also to the retail investor.
We'll come back to this theme in a short while, and we'll touch on maybe regulations, but I want to pick up on another theme that you wrote, that I think was discussed earlier, which is, blockchain as a tool, right, for businesses, for enterprises. We talked about investment now. Maybe from Sonia's perspective, right, you've been dealing with a lot of the I guess, brick and mortar sort of issues, SME financing, issues. What's your own view of blockchain, and what your hopes and aspirations, and how you think it can it help you in your business, or is it another hype, and people are always talking about this and having no real material impact to the things you do?
I think the application of blockchain is definitely not a hype. The fact that it can be applied to businesses like ours is a reality, but it also comes with the fact that it needs an entire ecosystem to operate for us to be able to leverage it. So as an example, let's say we do invoice financing. How can we benefit from blockchain? Now, if the very trade finance is embedded in the blockchain ecosystem, it allows us to leverage that system, use the invoices with more confidence, knowing that invoices are not duplicated. When they're getting invoiced, they are actually based on a transaction that is taking place. Makes life easy in terms of giving the SME the much needed finance that they do need today. So that's one simple application just at the very basis of our model of SME financing. I think beyond that, there are a lot of use cases. Just reconciliation, which I think cuts across many businesses, is a pain that we deal with. The middle office operations, how do we reconcile the payments from the loans that are being given? Something that can be managed more feasibly in an ecosystem of blockchain. At the end of the day, I think the challenges will remain till it is adopted widely, supported by banks, supported by the entire trade finance ecosystem, and we'll be very happy to have to see that world so that we can leverage it further to fulfill our ambitions of SME financing. I think so far we've just been kind of looking at blockchain as a technology that can enable use cases for us, but at the same time, waiting and watching for it to really take off and hit its prime time. I think prime time of blockchain is still far from where it can be.
It's interesting that you talk about using blockchain as a means, and Derek, you mentioned about and in today's newspapers, right? The new announcement of MAS and the Bank of Canada using blockchain technology. And so you have an example of big financial institutions, not just banks adopting it. What are your views on it? Do you think is this the way to go, or again is this another hype and it will just go away in a while?
I think the low-hanging fruits for blockchain is obviously the processes we have now. Be it payments, I think clearance of trades, all this, right? I think it will come. And I think banks, we are looking at it. Of course, we need data points to ensure that everything is accurate, everything is as good as the current system, or if not, right, if not, it's better than the current system. I think but I think I do echo what Hendrik has shared earlier on. I think what is interesting for blockchain technology, right, is the access to the retail investors. Some of the investments that in the past only the ultra highs or the rich they have access to. So I'll give you an example, like in the recent year, arts has been a big investment, but is it accessible to? Not really. It's only accessible to the rich. But if you're using blockchain, right, you can break it down into small units, right, and if it's accountable, right, all this, right, and then even the retail investor, they can put it as low as $5,000. You can invest in the Picasso. You can tell people I own the Picasso, or things like I mean there's a lot of people who love horses. Example like horses, but the normal retail people, they are only in the end game, which is the gaming portion. But there's a lot of people who love to own some of these horses. But today, right, if you look at the way it's being regulated, right, it is almost impossible for a retail investor to own a horse. You know, but if you look at, I think blockchain is able to disrupt that. I personally feel it's able to disrupt that as well. So things like cars, you know, if you look at Ferrari, do you know GTO today, you know, it is calling for 35, it just was auctioned by Sotheby's for $35 million US, you know. But these are, again, only accessible to the big boys. But of course, then the later part, right, is right, how can we make all this bankable? You know, because all these are just people who have enough spare cash, they know it, they don't need to be bankable, then they just leave it there as spare cash. And this, again, I have to go back to the small group of people that can afford it. But once we can make it bankable, the normal mom and dads, the retail investors, they are able to access it again. I think that is more, I feel actually blockchain will actually disrupt that and go into the finance industry, you know, and then banks will accept it from a instrument, you know, point of view, right, as you know, and from there it becomes an asset class. I think that is something that I think blockchain can disrupt. But of course, you know, I think what Sonia speaks about and some of the panelists, they talk about some of the processes, all this. I think these are quite obvious. These are, you know, because it is in banking now, even for cross-border payments, all this, right? I think it's Shaga, you pointed out, right? You know, why do you need, when you send money to London, why do you need T+3? You know, it's ridiculous. Why do we still accept that? You know, when you can download a movie, you know, with 5G, it's supposed to be in 5 seconds, right? You know, but today you need, when you send money, you need to wait for 3 days before the third party or your account in London can receive. I think this will be all changed, you know, and we should change it because we are moving forward. And I think time, everything, and the expectation of the consumer actually is much higher now compared to the past.
Yeah, I think Derek's views are quite interesting. I'm not sure you want to own a blockchain of a Ferrari. I think most of us would rather own the old Ferrari if we can afford it. You know, but maybe on that idea, maybe back to Jinesh, right? You know, just to tap on your years of experience in investing, right? You know, and you mentioned that, you know, blockchain is something that, you know, you've been watching as part of the overall investment theme. Right, what are your own thoughts on investing in blockchain? You know, you've heard different perspectives on the panel about, you know, using it specifically, using it as a new asset class. You know, very happy to hear your views on how this whole area will develop.
Yeah, so again, let me stress that we're somewhat tech agnostic. I know that sounds very perverse for a VC fund to say that, but we don't think tech alone enables companies to become world class. I think you have to build businesses that can adopt technology in a way that drives value. And so if I think to our own investments, less than 5% of our portfolio is tech model innovation, what I would define as truly world-class technologies that don't either exist here or are in the pipeline. So we've had investments in quantum computing, which is a real technology bet. It's not really a business model bet. But the vast majority of our investments are business model. And so then when you look at blockchain, which we just see as any other tech layer or tech application solution, what are the businesses that take advantage of that technology and build world-class businesses on the back of it? You know, it's interesting, it's T+3 to settle between here and the UK. But TransferWise, if you know what TransferWise is, does it in 30 minutes. And why? Because they just work with the banks to solve a problem that the banks can't solve themselves. So you don't need a blockchain to solve that problem, right? So it goes back to this foundational issue of what drives value. And for us, business models drive value, and we therefore invest in companies that solve for it. You know, we've talked about supply chain. In insurance, claims management is by far one of the biggest headaches. This is not a problem that is unique to one insurer. It is unique to all insurers.
It's true.
And so you're going to see companies that build utilities around that process, which can be monetized and which can be scaled. When we find that player, then obviously we are much more interested in investing than in just the core technology development of addressing that need. If I think more generically, we love infrastructure in any technology stack because it's the infrastructure players that don't have to go out and build the ecosystem, but are natural beneficiaries of the ecosystem that, for us, are great investment opportunities. So again, back to the kind of gold rush analogy, I'd rather buy exchange infrastructure and clip a fee of everything that happens in that gold rush and be in the picks and shovels than be the guy trying to trade and predict where Bitcoin trades today or tomorrow. So for us, those are the areas that we typically focus on. We've only made one investment in the blockchain space. It was in the infrastructure space. It was specifically around exchange and custody, and that's where we saw value. But going forward, our thesis and our philosophy stays the same, which is if a business model comes to us with the use of blockchain, could be part, could be a component of, then great. But it cannot be the defining reason for investing in a company.
Oh, interesting. I think your own view is investing in it as an infrastructure means rather than as an asset in itself, I guess. So I'm mindful of time. I think you've heard very different views. Different perspectives from the banker to the tech person to the use the needs-driven business. I wanted to open this time to questions, and then obviously we've got a wide range of experience and perspectives here. We don't have much time left, so quickly grab your opportunities before we wrap up. Anyone from the audience with questions for the panel? Oh, okay, sure. Is that a question? No, that's not a question. That's a photographer. So. Any questions at all? Anybody? Don't be shy. Yes, I see a hand. Could you just get a mic to the gentleman at the back?
So again, a couple of points, great discussions. Sonal, you mentioned a point that blockchain is still way to go to reach its prime. And again, Sagar, you mentioned that there are a lot of use cases possible, but right now the use case seem limited to cryptocurrency or very limited use cases, right? So just curious, where do you see the challenge? I think blockchain has been here for a while. We have been discussing blockchain. So why is it that the prime use case for blockchain, even all that, after all that years, is still cryptocurrency or very limited use case, right? Is there a problem with usage? Is there a problem with understanding? Where exactly is the lack or where exactly is the delay happening?
I think the fact that blockchain has wider use cases has been an evolving feature in itself. I think it started with Bitcoin and people getting swayed with the application of blockchain with Bitcoins and the cryptocurrency, and we saw the surge happening there. And then potential use cases started kind of peeling out on their own and people realizing the applications. I think it also has led to some fatigue to what you pointed out, which is very self-fulfilling, that blockchain is there but it really doesn't solve anything because then people kind of carry on with their regular mode of business. So the people who are responsible for carrying out the change also kind of moved with the fatigue. And I think there is some self-correction that has happened, especially with the prices that kind of surged, and there was a correction that happened, which led people to realize that there are real use cases and applications, something that has already been pointed out in the panel, where people are beginning to realize that application-based use, not just exploring the technology, but exploring its practical applications, needs to evolve. And I think a lot of focus only in the recent years has happened there. So it will take time, these technologies, you have to realize I think the principle of this technology is it is not just a technology, it kind of changes business models. and that will take its due course before it kind of hits into full in a full mode, in my opinion.
Also, I think it's not the problem of the use cases. I think we simply have to recognize we are in the early stage of a technology. It simply takes time. We have to be patient to do things. If you know the realities of a bank or a corporation, to create any meaningful process, you need is a big effort. Yeah? So 2019, especially in the banks, is the area of the proof of concepts and the pilots. And they're doing a lot of it. They just not always talk about it. And then, let's say if you are in the reality of a corporation, then you have your budget process. So probably this year, for the next year, you get into the budget, the larger rollout. And in 2021 and 2022, we probably see it in a bigger scale in action. So we have to be simply patient. Also, many of the ideas, they touch, of course, regulation. Now, anybody who has tried to get a license for anything that is regulated, it's a 1 to 1.5 year process. Yeah? And so I just say, I think there are a lot of use cases out there. Maybe they are not properly communicated, but it takes time and effort to realize them. And I think we will very soon see the uses for it, like I said, in supply chain management, others where it's easier. And then the larger scale uses where financial institutions are involved, they simply will take a few more months or 12 months so that it come to some bigger reality.
No, I think I agree with both Sonal and Heinrich. I think in addition to what you mentioned, I think there are one or two more things. So one is, I think, because the technology is so beautiful, sometimes people are in awe of the technology. And I think there is a mismatch between the technology guys building products and the business guys trying to match technology with the business. I think there needs to be a balance. And the other thing is, as I said, I think a lot of people have that mentality of retrofitting technology and finding a problem to solve. I think it should be the other way around. You have a problem and then see if blockchain or digital assets could solve that problem. So I think it's a combination of multiple factors. But I do agree regulations is obviously one of the biggest factors. But the good news is I think more and more regulators across the globe are becoming cognizant of the impact of technology, and they are coming up with new frameworks. So hopefully very soon in the short to mid-term we'll see more and more regulators opening up to this technology.
Okay, we have time for one more question, I think. Maybe two if you are fast, but one more question, anybody? Going once? Going twice? No? Okay, if not, to wrap up, I'm going to ask for each of the panelists to share, well, I guess, one hype and one hope about blockchain, that you have experiencing, so and what tips you will leave with the audience, with blockchain, in terms of where we go from here. So maybe we'll start with Sagar.
So you said one hype and one hope?
Oh, one hype or one hope.
Well, my hope coming from Ripple is that in the near future we'll be able to build a new infrastructure powered by blockchain and digital assets where the dream of Internet of Value, where we can move money from one country to the other in a matter of seconds, becomes a reality, and without using the existing infrastructure, without having to rely on one hub and spoke model. That's my hope. Hype would be, and again, if I'm no one to give advice, but I think I would personally stay away from the ABCD mentality. So A for AI, B for blockchain, C for cryptocurrency. But again, try and see if there is a problem worth solving with these technologies, so which is something which Jinesh also has been. So I fully agree with what Jinesh mentioned.
Thank you. Jinesh, yourself?
I'm going to answer the question by just giving you a company I like, maybe, because I'm an investor. We haven't invested in the company. It's a homegrown company, and it addresses two parts of blockchain infrastructure that I think are going to be continuously having to be addressed, particularly in public blockchains, and that's on high throughput and security. And so there's a company that came out of the university's program here called Anchuan, which has built a core platform which has got high throughput and a high degree of integrity around the security of that blockchain protocol that they've built, but are focusing not just on the protocol layer, they're focusing on all the applications of that protocol for real world customers. So businesses like this fascinate us because they are looking at security and custody issues, they're looking at OTC settlement issues, they're looking at supply chain management issues, and this is with real customers. So that's the characterization of how I would invest, and this is one of those companies that we think, had they not done an ICO, we would have been an investor, but thanks to the ICO market, uninvestable.
Thank you. Hemrich?
Yeah, my hope is that when we meet in 1 year from now, we hopefully all have on our mobile phone a wallet where we have a few tokens there, but it's not anymore the cryptocurrencies, but where we have some ownership of maybe some building here and some fractional ownership, as you say, of some art and of some companies. Yeah, the Ferrari, we all hope that we own one of them.
Oh, I want to drive it, I don't want to just own it.
But, my advice is, and this is often the question, so how shall one invest, is we are very sector focused. So I always say, choose a sector you feel comfortable in, you have some expertise and you understand, and then try in this sector to find out, okay, where blockchain is interesting, if blockchain is your topic, and then invest in something which you can understand. Because if you can't understand it, probably it's already a first sign that maybe it's not the best investment opportunity.
Thank you. And Derek and Sonia, sorry, you have to speak before the bell rings again, so.
No, I think it's, and I think definitely the hype now is all the, which is last year, I think, last or 2 years ago, and there's all these different currencies coming up. And I think I think what the panelists have shared, especially Janish, right, and as an investor, I think focus on the infrastructure. I think my hope is actually people start look at the technology behind blockchain and what they can actually do, not just for the banking industry, finance industry. I think there's a lot of good things if you really focus on the infrastructure. And I think my hope will be basically for the infrastructure to be the hype in the next 1-2 years here.
Thank you. And Sonia?
I think the hope will be adoption, more and more adoption across the board. The hype, I think, is fiat money being replaced by cryptocurrency in totality. Let's not forget internet access is not available to 100% of the world yet. So that's a far, far cry right now.
All right, and that's all the time we have for today. So please join me in thanking our panelists, for I think a very engaging and wonderful session.